Welcome to another trade recap. Today was one of those choppy sort of price actions. Let's start off with news. We had news at 10. Most important one was pretty much at 10. And then let me update this real quick. So we had a news come out at 10. This was really much the most important one. The new home sales. Again, if the actual is greater than the forecast, which in this case it was, that means it's good for currency, and return is bad for the S&P 500. And then same thing with this. This one's actually the opposite. This is what you got to pay attention to. So actual is less than forecast. See, this one says actual is greater. So actual is less than the forecast is good for currency, which in this case it was more than the actual forecast. So it was bad for the currency. So in return, it was good for the S&P 500. Anyways, so we are currently at all-time high on the S&P 500. Let's go over my confluences for the day. So coming into the market, market opened around, let's see, let me mark it out real quick, 9:30. All right, so coming into the market, we had this 4-hour low, this 4-hour low, this 4-hour low, along with this 4-hour high and this 4-hour high, right? Let's go down to the 1 hour to get my more precise entries. So right here, this hour right here, hour, which were in confluence with the 4-hour as well. But yeah, scaling to the 1 hour kind of made me realize, we have an hourly liquidity drop right here, and an hourly liquidity drop right here, the major ones, right? And we didn't scale to the 15-minute. Any other confluences, which was pretty much this 15-minute right here and this 15-minute right here. Yeah, so then with that being said, we scale down to the 5-minute, watch price action sweep a liquidity draw. Price open, quickly swept this hour and 4-hour liquidity draw, right? But again, we were waiting for 10 a.m. But it sort of depends on how market is flowing, right? So obviously there's some like news days where I don't trade. For example, like tomorrow we have lots of news just to start off, but there's also Fed Chair Powell speaking. And usually when a federal chairman speaks, I just don't like taking a trade because it's super volatile. Call me chicken. It's just, being smart within the market, avoiding unnecessary losses. Um, Yesterday we had taken a loss, but we bounced back today, with the 5-1. So super thankful for that one. But yeah, like I said, usually, there's certain orange folders that I wait for in new homes, and for example, like there's new homes, and then there's consumer sentiment. Like those orange folders are they're known to cause a lot of volatility in the market, right? Think of it like water. Water flows normally, but when there's like a tsunami coming, like water, like it's super slow, goes all the way in, and then it causes like havoc, right? It goes crazy. Or think of it like when you're dropping a big old rock into the water or a pond, like you drop a big rock into a steady flowing or steadily still moments before, the water is very still, like, right? So that's the market um before news drops, super volatility news drops. If it's super slow, super choppy, super um like this, like super consolidation, Um, that's because news is gonna cause most of the time news is gonna cause like a big volatility move. So then news, think of the news as the rock that jumps or that drops into the water, right? Um, and then all the ripples come out. That's like the super volatility move that news causes. That's like an analogy I can give. So you can better understand like how news affects it. So if I'm seeing liquidity sweep, let's go down to the 1 minute, just watching price real quick. If I'm seeing that price is flowing very good, um, nice and smooth, then it's because um, price is not gonna be that impactful. But if I'm seeing that price is consolidating, making like these like choppy moves, it's because price is gonna cause some type of movement. All right. Um, in this case, price was just very, very, very concise and consolidating right here. Not consolidating, but super like choppy right here. Um, Going up, and it wanted to sweep these highs just one more time. But let me just show you how price was. Obviously we got that 5 minute. Um, Jesus, we got that 5 minute liquidity sweep, and then we got that breakdown. But we wanted to see that retracement, which was in this candle, right? That's when I was like scaled down to the 1 minute because we swept high time frame liquidity. When we scale high time frame liquidity, right? I want to see um, a push down and a retracement back up, and then a drop, right? And in theory, that's like how I go about my trading plan. If it's a 15 minute, I'm not waiting for a little 5 minute retracement. Like I'm quickly scaling down. Once I get my retracement, I scale down to the 1 minute, right? And we start looking for our trade. So in this case, we got our sweep. We got started getting our retracement like around here. So we were just watching price. Um, Honestly, some people like if you didn't wait for the retracement, or you got FOMO, fear of missing out of like a move right here after this liquidity sweep, because pretty sure there was some people who seen this and then seen break a structure right here, this fair value gap right here, tap into it, and we're like, okay, boom. And they were like, boom, like off this rejection right here, stops right above these highs. And you're aiming for all this extra liquidity down here. Let's say like like all this liquidity, and you're like, boom, found my entry. You're like, yay! You get discouraged again because it taps in 1 minute. And you're like, okay, now we're for sure. And then boom, goes right back up, sweeps you, takes you out, and then starts dropping down. Which is why I say wait for that 5 minute retracement. See, like you entered too early. If you would have entered there, you entered too early. You didn't wait for that 5 minute retracement because we swept that high time from liquidity. You guys gotta understand, it's okay. Like if you miss your entry, there's gonna be entries, gonna be trade setups. Like another day. The market's always gonna be here. You gotta understand that. Um, like yesterday, like I took that loss that hurt because it ended up playing out in my direction. But staying disciplined, not taking more than one trade for the day, is key to success. But yeah, so people could have taken out, could have entered right here. That was just one example. I kind of didn't really wait for a fair value gap to form just because we swept all-time highs. I knew for a fact that after coming up to these all-time highs, it was bound to retrace and fill in this take out all this liquidity. It was right here, at least to right here. how was I so sure? Just market intuition, honestly. Um, we were at all time highs. The market has just opened. I'm assuming we're gonna get some sort of retracement before we start pushing for to further all time highs, right? So I started seeing a lot of selling pressure, which is where I entered. But I started analyzing my trade even more. I seen a lot of people could have just entered off of this fair value gap that formed right here, right? This fair value gap as rejection, and could have entered right here, and then TP1 or TP1 right here, TP2 around here, TP3, and then TP4. You know, all the way down here, like I did. Um, but as soon as I started seeing like selling pressure from here, and I seen it come right back up, and I seen this wick reject, I was like, oh yeah, it's game time. So entered right there, stops right up, like before we got to these highs. 'Cause I didn't really, I was, almost certain that we weren't going to come and take out these highs again before taking out these lows, because there was a lot of low resistance liquidity right here that needed to be taken out, right? So, but either way, like I said, like you could have entered from this fair value gap right here, right? Because like I said, if you're waiting for that 5 minute retracement, um, you would have started looking for a trade around 950, right? So 950, 49.50 right here. This is where you would have started looking for a trade, right? So this would have been not even like, you wouldn't even been in the 1 minute right here if you're going based on how I trade. Um, you're looking, you don't see nothing. All right, you're looking. Okay, we started seeing some, like this is like choppy work. But then you start seeing some like selling power, some bearish order flow, and you get a small like fair value gap. Mark it out, see the strong rejections. You could have entered right here at this breaker structure. Bow, right? And like I said, could have aimed for this, all this right here, uh, all the way right here, all the way right here, or even here if you really wanted to, like I said, like how I did, right? But there was like a lot of opportunities, even though it was a bit choppy market, like choppy price action. We could have entered, like, here's one, here's two. Even though we wicked over, like we did not break structure to the upside. There's another possible entry right here. And honestly, this was like really good because this is you got sort of like a inverse for value gap right here. Um, so that's like two confluences already right there. Um, where else? If you would have entered right here, yeah, you would have got stopped out unless you're like putting your stops all the way up here. But at this point, it's too late in the market. You should not be taking a trade after like 11 because that's lunchtime. A lot of, the New York Stock Exchange goes to lunch around 11, 11:30. So like the market starts moving super slow. And then you get that midday reversal, which in this case happened later in the day, like around 1:30. Yep. But there's usually a midday reversal. Um, and that's because, most of the traders from the New York Stock Exchange go to lunch around 11, 11:30. So there's not a lot of buyers or sellers, in the market at that time. So there's probably going to be one direction of, participants. So that's why the market pushes one way and then it starts pushing the opposite way. Um, yeah, like there's another one right here, but this one got invalidated. Um, oh, but yeah, so yeah, like one, two, and you could have entered off of this rejection right here, and then this breaker structure right here. Bow, push stops all the way down low. But today's like price action was like really choppy. Um, if I didn't catch this trade, I would have probably hopped off the charts around 11 because I'm not trading anything after that because price is super slow, market super slow, It's lunchtime, and there's no point of trading anymore because now you're going into the PM session. So unless you trade the PM session, wait for lunch to be over, go for a walk, go eat, and then come back around 13, so 1 or 1:30, right? But yeah, so that was my trade recap for the day. If I would have got stopped out, I would have just taken my L again. Luckily, price decided to start moving in my favor. And just a lot of market intuition, I guess, when it came to these all-time highs getting swept. And I kind of just jumped the gun because I kind of broke my trading plan today by jumping the gun right here, I guess you could say. But again, I believe this was an SMT. Is it 10 o'clock? Wednesday. 10 o'clock. Yeah, see, like, high double. Yeah, see, like, there was a high, and then 10 o'clock. Oh, actually, no, there was no SMT right here. I'm bugging. Yeah, so I kind of broke my trading plan. And then I wait, did I? 10:15. Well, oh yeah, it was like these were high, these were low. Either way, yeah. So I jumped the gun too early, but that was just based off market intuition. All-time highs were bound to get a retracement. And regardless, I started like as soon as I seen this fair value gap, seen this rejection, I was like, okay, either way, it's go time. So I was already in. I was happy, and I was determined that we were gonna come for these 15-minute lows. Bunch of low resistance liquidity, and I found a thing I could have put these 1 hour lows, but I didn't want to feel too too ballsy just because price was just going up and down, and it wasn't really giving a clear direction yet till like it reached like 11:40, and eventually came all the way down and just took this hourly lows. But I was already happy with my 5-to-1. I'm not greedy. I take what I can get, and this kind of puts me at break even for the week, or more than break even for the week. I'm tripping. Yeah, 5-to-1. But yeah, so tomorrow, Thursday, lots of news coming out. Unemployment claims. Federal Chairman Powell speaks. When there's Chairman Powell speaking during market sessions, I'm not trading, so I'm not gonna be trading tomorrow. Friday, we just got core PCE price and consumer sentiment at 10 a.m. Should be a good trading day, hopefully. I'm not gonna trade till this news comes out again because consumer sentiment tends to be very volatile news. So yeah, thanks for tuning in, guys, and I'll catch you all in the next trade recap.